Hey, what's up, everybody? This is Chef again, and today what I wanted to talk about is hedging. Okay, so I'm not here going to teach you. I'm not going to come and teach you this. How to manage your financials, right? That's not what it's about. Okay, I know a lot of people think, well, maybe somebody needs to teach me how to, manage a 10% or 20% or 30% or 5% and things like that. Well, I'm not here to explain that, okay? I'm here to basically show you a few tips and tricks on how to properly hedge when there's upcoming things in the market and what to look for, okay? There's going to be some tips and tricks here. Hopefully you guys can keep up today. This is probably something that can potentially help you in the future. And with the next upcoming events that happen during the week or in the next 2 weeks or within a month or with anything that pops up, okay? What I have here is /ES. You guys know that I always start with the futures and just want to show you guys something that it's very, very noticeable. We're very green, okay? We're bullish in this market. So I want you to take this as a note and know that we are bullish in this market, okay, guys? There is still no reason or proper reason for anybody to say that we are crashing, okay? So please get that out of your head, all right? Unless you can show me 10 different sectors that are all red and turning red, by all means, show me. But as of right now, everything is still bullish. There is stocks in this market that's making all-time highs. There's stocks reversing. There are, trend changes happening. Like there's a lot of opportunity in this market, okay? Now, I'm not saying that we're going to stay bullish 100%, okay? Because we do experience pullbacks. The pullbacks for the retest, the pullbacks for the break of supports, and then you get the retest, and which causes more bullish plays and, all that above. So be aware of what you guys are trading in the current conditions in, okay? So this is what I want you to get your mindset, okay? I'm showing you and I'm going to give you a few tips and tricks on how to hedge in a bull market, okay? This is what's crazy because everybody naturally always thinks that this is what everyone teaches is if you have, like let's say 2 calls in the market, you want to grab 1 SPY put. But if you're grabbing a SPY put right now in a bull market, don't you think that that's going to go against you and that there's a higher potential that your stock may come down? Therefore, you're in 2 bad trades with your hedge going against you. Okay, it doesn't make sense. It doesn't make sense to come in and grab a SPY put just because somebody teaches you that's a proper hedge. That is not a proper hedge. Okay, you got to understand the market and the direction and what we have in front of us in order to grab a nice judgmental hedge. Okay, a hedge has to make sense for the current market condition. So hopefully that kind of makes sense. All right, we don't grab SPY puts just because we want to hedge. Okay, all right, so first things first is I already gave you the market sentiment. I already gave you what's in front of us, a bullish market. How do you hedge in a bullish market? All right, so one thing, a hedge is to protect your portfolio, okay? So for example, just kind of like what I said right now, if you had like 2 calls or 3 calls, you would definitely be looking for like a couple put plays somewhere, right? And then also, so I know some people use spreads, they sell premiums against whatever there's, holding positions for and things like that. So that's another great way, but I'm not here to teach you spreads. So that's one. You want to make sure that whatever calls you have, you protect those calls. How can we protect them? Okay, everyone knows what the FOMC is. If you don't know, please go do some research and go ask someone, please. FOMC, Jerome Powell, you guys know that every time he speaks, this market goes crazy. Okay. Now, what is one thing that you can go look at? Now, let me point something out for you. It's going to depend on the type of topic conversation that he has. One thing that I've noticed so far is that the financials, when he speaks, they like to go up. Okay. I'm not saying this happens every single time, but it's something that you can have your eyes on. Whenever he speaks, when there has to be some type of monetary conversation, the financials get rocked. Okay. In that case, what you want to do is you want to come look at gold. All right. So let's just say, for example, on it's market open on Tuesday or whatever, and then Wednesday, you know that he's speaking. Okay. And you have calls going into Wednesday. You should be grabbing a gold call or a gold put, whichever one you feel comfortable with, right? And then allow the FOMC to drive this up based on whatever is going to be said. Therefore, if you have your calls on whatever stock is out there, you're going to be able to hold through the volatility. Okay, because now what you're doing is you're playing the catalyst that is right upon us, and you're understanding getting in the day before to protect your capital the next day while the market gets rocked, because that's what's going to happen. And this is some of the warnings that we always put out there. We say, watch for volatility. If you can't trade volatility, just simply stay out. It's okay. There's no need to come in and try to make thousands on percentages because of a news catalyst. Okay, there's no reason for that. If you want to protect yourself, come in and check out gold. Okay, every time FOMC speaks, gold gets rocked somehow, some way. It moves up and down aggressively, and I've been in these positions where I've traded gold and I've traded financials for that quick pop and sell my take my profit and still be able to hold my swing call positions, because I understand that the volatility is just moving based on that sentiment, and that's it. Larger time frame, like I said, with the market, we're still bullish, and there's nothing changing that. Okay, so even here when we try to downtrend, look what happened. We came green, made an all-time high, pullback, green, all-time high again, all-time high again, and it's not stopping, guys. All right, so quick tip on the gold. Go ahead and look for /GC. The ticker that you can get into that it's very helpful and good premiums is GOD. You can also look at JNUG. JNUG is not a huge mover, but definitely you can get into some shares and trade this to the top side or to the downside, whichever one comes first. Okay. On top of that, you have the XLF, which is the financial. So now we're talking about money. When you're talking about money, you want to go look at things like JPM, BAC, GS. So like I said, a hedge doesn't always necessarily mean that you have a put. A hedge is something to protect what you already have working in a bullish market. Okay. So in this case, you're just playing the volatility of the FOMC on Wednesdays. You're taking profit. Thursday come around. Now you're going to go look at your swing plays. You're going to look at your portfolio, and you're doing okay. So there's nothing crazy. You know, if it's FOMC, you get in Tuesday, you take profit Wednesday, and on Thursday, you go check in on your regular position for your portfolio swing trades. That's it. Very simple, right? Okay, that's one. All right, looking at the financials and the money aspect of FOMC catalyst. All right, another thing, let's go look at the VIX. I've said this plenty of times and I will say it again. You cannot come on here and chart the VIX and expect a little trend line to be support. Why do I say that? Because this stock is not based on support or resistance. It is based on volatility alone. Okay, I hope you get that. Write that down. Take the notes. If anybody tells you any different, they're probably new traders. Okay, so telling you now, you cannot chart this. All right, so This is what it is. Another thing that can potentially happen in the market. You guys are all aware that we're at all-time highs. While we're at all-time highs, a lot of people like to hedge with VIX calls. The calls, because at any point in time, if the market drops, okay, if you guys see SPY dropping down and Q dropping down, the Dow dropping down, IWM dropping down, it's going to create some sell-off. The sell-off creates volatility. The volatility, sorry, not the 5. The volatility comes in here, okay? So just a quick example. When the market is red, you're going to see these pumps like this, okay? You're going to see these pumps. This is what you'll see. Even here, the VIX started rolling on up because the market ended up being red, okay? So whenever you see the volatility in the market and things are selling off, your first initial reaction should be to come and look at the VIX and potentially get into some call plays just for the day trade. Don't come in here and saying, oh, it needs to break above 16, needs to break above 1630. Its target is going to be 17. Okay, don't come looking at this chart like that. Come in here knowing that there's some volatility in the market. The market is red, and you're just grabbing some big positions to protect your swing plays that you already have, if that's what you have in your portfolio. If you don't have that in your portfolio, don't come in here using this as a hedge. Come in here and use it as a day trade. Okay, there's a difference. The hedge is already, you're looking at it because the market is an all-time high. And just to give you an example. All right, so I'm gonna go on to 15 here. All right, this is on the 15. All right, I'm just gonna compare here. All right, you see this? So while this market was coming down, you guys should have known, okay? You should have known that we were coming down. At that point, if you would have seen this nice break right here, you could have entered right here. Look at the same pattern. All right, so you can come check this out and look what happened. We ended up coming back up, and look what happened with the VIX. Ended up coming back down. Okay, we're at all-time highs, so you're definitely going to see the volatility come in because we just made an all-time high. When we make an all-time high on ES, the VIX gets a lot of attention. People are hedging their positions because they know we're at all-time highs, and they know we're going to see these aggressive pullbacks. This is what we talk about in the chats all the time. There's aggressive pullbacks at any stock that has an all-time high level. Those pullbacks are very, very aggressive. I'm sure you guys have been trading Apple lately, and the way that it's at all-time high, it's having aggressive pullbacks, okay? This is with any stock out there. But here is your tip. If you have long positions, okay, and you want to protect them, and this market makes an all-time high, automatically switch to the VIX and get some calls here to protect your position. What you're doing is you're building into your swing plays. Therefore, your swing plays become free, and you don't have to worry about cutting loss or averaging down on your swings. All you got to do is come in here, grab some SPY calls, some VIX calls, and make some extra money. Therefore, you're paying for your swings, and you're stress-free, right? And the VIX, like I said, this goes here not only for the all-time high, but in case there's an economic news catalyst, okay? For example, last week. All right, I'm gonna go back to these charts. What happened last week that was a major catalyst? Right here. Okay, this drop right here was when they were talking about the, sad to say, the Taliban news, and then the everything about like considering war and all that stuff. I think it happened in this one as well. There was a lot of talk about, potentially having wars and all this stuff, and there were some bombings going on, and it was just hectic. Okay, very sad day for everyone, and prayers go out to the families for all the everyone who lost someone in that bombing. But there's there was economic news, okay, and it hit the catalyst, it hit the market, so the market ended up being red that day, and it moved with momentum. At that point, you can also go look at the VIX, okay? That catalyst is not something that is dropping the market to be bearish in general. The market is bullish, but the catalyst will come, and we have to be ready. So when that time comes, you have to be ready as a trader to protect your capital that you have. If you don't, then don't worry about hedging. Get into these catalysts as day trades, but understand what's happening. Don't come in here thinking that the world's falling apart. All right, be wise. Go look at the VIX and trade that momentum, and that's it. Get in for the momentum trade and get back out. Okay. All right. With that being said, what type of economic catalyst is it? Okay. In this case, it was a war. So the first thing that I did when I knew that there was war talks, I went to go look at LMT, Lockerhead Martin. All right. What you want to do is when you see any type of catalyst, you want to grab it related to any stock in particular. Therefore, you're going to look for a nice momentum trade on that stock, which is going to be like a pump and dump type of trade. Okay. And again, I'm not saying that you should come in here and always do that, but it's something that can protect you and your portfolio. So what I ended up doing around that time, I ended up grabbing some calls here. We ended up taking profit around 365, which was awesome. So naturally, when that happened, I saw this movement on LMT, and it was pretty decent. It was right here at that resistance point. So I was able to identify a quick support and resistance and a take profit. My take profit was around that 365. 364. And then that was an overnight pump, and then that was it. And then I'll see how it's trending down. It's actually a good stock right now, and it just got like crazy volume today. But definitely going to add this to the watch list. But but this is kind of what I did. Okay, guys, I didn't panic. I held on to a lot of my swing trades, and I went to go trade something that was moving with the economic news, the catalyst that was involved with the market and how it drove everything. While everybody else panicked, start thinking about the market crashing and 10% correction and all this stuff. What I was doing, I was just looking for that stock that was moving with the catalyst and holding all my swing plays, and I didn't care because the next day all I did was average in my position with some weekly contracts, got back in, and went in the green. I didn't get moved or shaken by any of the red candles. Okay, so this became a natural habit for me to do. All right, so the other thing, like I mentioned earlier, when you guys are looking for puts, you're not going to go and grab a put on something that is strong. Okay, the futures are all nice and green. Okay, all these futures, they're showing strength. Okay, if you want to take any put overnight that makes you feel comfortable, and you have like 2 calls and you want to grab one SPY put, don't grab the strongest future in the market. Grab the one that is the weakest. The one that is the weakest, you want to grab a put on because there's a higher probability that that will keep on dropping overnight versus the one that has more strength. The one that has more strength has the potential to create one red candle, and the next one will be super green and stop you out of your own hedge. Okay? So be wise when you're coming into hedge, guys. Don't come in here thinking that you have to hedge every single time. Be ready for what's ahead. The economic news we're totally not ready for, but what you can do is automatically go look at the VIX and get into some call positions while that happens, only for the news pump. That's it. Only for the volatility, okay? Don't come in here thinking that the world is crashing. All right, there's a difference. Build into those hedges so you can have free swing plays. You're protecting your portfolio, you're protecting your capital, no matter what percentage it is, no matter what people tell you about percentage. Who cares? Manage your positions. That's it. Follow the charts, follow the futures, follow the market and what it is properly correlating with. Okay. So the last thing is oil. Okay. Oil is the other thing that you can hedge with, whether it's a call or a put, no matter what it is. oil and the OPEC stuff always gets a bunch of news. Anything that has to do back there with Saudi, or anything in Afghanistan, or anything like that with any type of news out there that has to do with this oil that's going to affect it, whether it goes up or down, come in here and check it out. Okay, be aware of what's happening around you with the economic news, and don't just grab a random SPY put to protect your calls. Okay, grab something that makes sense. Grab something that's going to protect you properly. All right. So yeah, that is the other one. And hopefully these tips will provide you with some hedge knowledge. And again, I'm not here to teach you percentages. I don't care for them. What I want to show you is more value than percentages. The value that is provided here is everything that has to do with the market properly broken down in charts. Okay, I'm not here to show you a 10% stop loss and only manage 10% of your portfolio. I'm not here for that. Okay, I'm here to show you what's true, what's valuable, and what you can do for future references when those things arrive. Okay, so let's keep this in mind, guys. And please manage your positions properly. If you're not in call plays, don't worry about hedging. Just go in there for the day trade. Okay, so this knowledge is also valuable for any type of day trade. This knowledge is available so you can use on a weekly basis, a daily basis, and just be aware of the market. All right, so I'm gonna leave you guys with that. Hopefully you guys paid attention, took some notes. And if you guys have any questions on this, please ask us, okay? I know there's a lot more information out there. I know there's probably more details that we can provide. But again, I don't want to take too much of your time, and I want to make this as short, simple, and sweet and to the point, so you can take your notes. So I'll leave you with that, guys. Know that this market is bullish. Please keep playing your calls, scalp your puts, and remember to hedge your positions when those catalysts come in, whether it's on Wednesdays or any catalyst in the market in general. All right. So stay green, guys. I hope to see you guys soon again. And yeah, have a green week.